Hello, and thank you so much for joining us this evening on the program. I'm Temple Ashaju. It was the final trading week of April, and this month saw a lot of full year and first quarter earnings released by companies as part of the post-listing obligations of the listed entities into the Nigerian capital market, the Nigerian Stock Exchange precisely. And so this gives us the privilege to dissect some of the results, impressive or otherwise, on the show this evening. Again, this week was a historic one for the Nigerian capital markets, especially the broker-dealer community, as the Chartered Institute of Stockbrokers ended its 25 good years of tenancy to CSS Bookshop by unveiling its own building in the highbrow Ikoyi area of Lagos. The commissioning ceremony was well attended by regulators and operators, veteran stockbrokers, and founding traders of the institute. You do need to stick around to behold this information-packed schedule we have lined up for you on the program Capital Markets this evening. But basically, let's begin with the market numbers as always. We start with the FMDQ OTC, where the bonds and treasury bills market actually thrives. We'll start with what we have. Strong buying momentum was observed earlier in the week. It tapered off later on. But of course, yields were declining 15 basis points on average in the treasury bill space and advanced 2 basis points on average in terms of the benchmark. If you take a look at the bonds table right there, you've got the total number of deals put at 32, while the total value of all that was transacted came in at 8.2 billion naira. For the treasury bills market, it was 668 deals that we had yesterday, Friday, and 167 billion naira was the worth of all those securities transacted at the secondary side of things. That's our platform. But given the grand total, we have 700 deals in total when you put the bonds and the treasury bills together, all valued at 175.20 billion naira. Let's move on to the unquoted securities market represented by the NASD-OTC. The USI saw some bargain hunting yesterday, which brought it up to 692.52, and that's by 1%. The market capitalization closed at 468.65 billion naira this week, after we saw a total year-to-date volume of 362.1 million. And let's do the equity market, where the markets closed out the week on a bright note, climbing 115 basis points on Friday to notch 105 basis points week on week. The all-share index standing now at 41,244.89 as against the 40,000 psychological line it had ended the previous week at. Equity capitalization was 14.94 trillion naira, while the total volume was 1.825 billion in terms of the numbers of shares that were traded. Going to the sectoral performance, you look at those that side, you've got the oil and gas sector alone losing 0.30%. That's some 30 basis points there, and that's on the account of the profit taking on Forte Oil. So let's get down to business. No fewer than 50 results were released into the capital markets this week, 4 of which were full year and others quarterly earnings. But on our radar this evening are Oando full year, which came in late last night to represent the oil and gas sector. But FBN Holdings and Access Bank will take the place of the banking sector, while Unilever and Guinness will help us to understand the consumer goods space, and then go to cement for the industrial. Joining us now to analyze this is Victor Chiazzo from FSL Securities. He is the head of research and investment at FSL. Thank you so much for coming through Capital Markets.
Thank you, Temple.
Now let's kick off with the consumer goods side of things, where I think it was the conglomerates now. Basically, we have Unilever. Unilever results came in during the course of the week. Some people have said that it has some bullish revenue, but basically, what was your first impression of Unilever, which represents the consumer goods sector now?
Thank you, Temple. For Unilever's result came in strong to analysts. for Q1 2018 as expected. We all know that the consumer space has actually been hit hard coming from the recession, where we saw a significant increase in the FX space, and the manufacturing and consumer goods sector were actually hit hard during the period. But coming into the fourth quarter of 2017 and Q1 into 2018, we saw some stability in the FX space, and we've seen that disposable income of the consumers have actually improved. So for the consumer space, we actually saw that in their numbers. So we saw an increase in top line for Unilever, which we expected going forward. And for Unilever, we're actually impressed because they have actually come out to actually target every aspect of the consumer space, because they come out with brands that actually target the low-income space, the high-income space. They've modified their products to actually gain further penetration. So for Unilever, the numbers came in strong for us.
Do you think the declining inflation rates is also a plus to this because of the purchasing power that has now, let's say, stabilized as a result of our exit from recession?
Yes, I agree with you. It has actually also benefited. And remember, Unilever also did the rights issue in 2017, and that also improved their interest expense. So if you look at their numbers, all these actually aided bottom line performance.
Talking about rights issues now, under the same consumer goods sector, Guinness also has its own rights issue. Yeah. The result also came in with some operational efficiencies and all that. But how much of impact would you say that rights issue had on their earnings this time, which is a half year now?
For
Guinness, actually.
Guinness came in with a 9-month result. The year ends in June. So for one of the few companies that the rights issue has actually affected their operations, because if you look at coming from the Q1 numbers, Q1 interest expense was about 3.3 billion, same as at Q1 2016. Q2, we saw a decline because of the rights issue hitting their balance sheet, and we saw a decline in interest expense from 6 billion the previous period to 4 billion. So there was a 2 billion spread. Currently, for their 9-month result, we saw a decline of about 42% in interest expense. So that actually also impacted on their bottom line. So for the likes of Guinness and Unilever, we've seen a significant improvement in bottom line because of the rights issue. So I think it was actually a good strategy for those companies.